That's okay. Ooh, LinkedIn is giving trouble. We're okay on YouTube. Just waiting on LinkedIn. LinkedIn is on. Okay, fantastic. So I will. Ooh, okay. I'll probably make you guys co-host. Make co-host. And make co-host. And then what I'm gonna do is mute everybody as they're coming in. Continue and admit everyone. Okay, so everyone is coming in. I'm just waiting on a few more people to come in. Welcome, welcome, welcome. Okay, one more person struggling. Right, I think one person's having technical difficulty. But welcome everyone, HTJ.tax. We do these live streams every week. Welcome. So we talk all things cross-border international tax, and we attempt to demystify the sometimes confusing world of international taxation. This is being recorded. So if you do not want your video to appear on the recording, all you need to do is switch your camera off and you won't be visible. So this is also being live streamed on several platforms. It will be recorded for those who said they have to leave early, or they're going to be in late, or whatever is going to be recorded and be available on about 25 platforms: YouTube, SoundCloud, Spotify, iTunes, Google Play. Basically, wherever you're going to get your podcast, this will be available. So and if you miss something while we're speaking, you're able to play it all over again. So it's all good. Please be aware that we are tax professionals, qualified tax professionals, but we are not your tax professionals, not yet anyway. So we're having a general conversation about general principles. This is not meant to be advice. You can take it as education, you can take it as entertainment. But if you want advice that's relevant to your situation, you need to engage an advisor who will know your situation inside out. So this is not advice. This is how I keep my premiums and my professional liability insurance as low as possible. So we don't want any misunderstandings. So without further ado, I introduce our two tax experts, Augusto in Portugal and Ricky in sunny Spain. Gentlemen, would you like to introduce yourself, please?
Ricky, go ahead.
Thank you. Well, so my name is Ricky, and I'm working. Well, I'm from Gutierrez and Partners. It's a tax accounting and law firm located in Barcelona, Spain. We've been working in international and also in Spanish matters for over 30 years. And well, I'm here to give you a rough explanation of how the Spanish tax system works and some of the advantages and special tax regimes that we have here in Spain. And well, hopefully I can solve some of the people's doubts.
Thank you, Augusto.
So I am Augusto Paulino, tax partner at DFK in Portugal, which is an audit advisory firm here in Portugal. We assist corporate and private clients. And the idea would be to share some of our experience handling with the individual clients that we have here in Portugal, share some information about the tax regime. And that's it. And thanks, Darren, for the invitation. It's a pleasure to be here with you and Ricky.
Fantastic. Thanks for sharing your time. So many of our clients come in, and especially from the US, and they would say, okay, I'm thinking of moving to either Portugal or Spain, which one? And sometimes we do models where we try to compare the two, but we thought, you know what, this points to an area of interest, let's have a conversation. Not that any country is better than the other. There's just pros and cons, and we just want to explore those pros and cons. There have been over 200 RSVPs to this event, and you have thrown a lot of questions at us. I apologize in advance. It is impossible to go through all the questions we got. Some of them were pretty lengthy. We got it, but you know, time is not necessarily on our side. It's tax season for everyone here. So what we've decided to do is we have looked at the commonalities and we've come up with 10 questions that more or less we think covers everything in terms of subject matter that people have been asking. So we go through each of these 10 in turn. And then if those, you know, you don't think your specific area was covered, then feel free to ask. So let's just jump in, right? So tax residence. How is tax residence triggered in Portugal versus Spain? Augusto, generally speaking, how would tax residence be triggered in Portugal, please?
Okay. Generally speaking, so there are several criteria that can trigger taxation, but the first one would be to spend more than 183 days in each 12-month period in the Portuguese territory. Of course, you can also be considered tax resident even if you stay less than that period in Portugal. If you have in Portugal a residence with the intention to live there on a permanent basis. Those would be the main criteria. Of course, if we are discussing the tax residency between different jurisdictions, other criteria may apply under the double tax treaties concluded between the different jurisdictions. So what we call the tiebreak clauses, central vital interest, etc. But generally speaking, would be this rule.
Okay, fantastic. Thank you, Augusto. Ricky, how is tax residence triggered in Spain?
Well, basically, since we both come from the European Union, everything is almost under the same model, under the OECD model, and basically the criteria is pretty much the same. It is based on three criteria. The first one, obviously, is the 183-day rule. If you spend more than that, then you're automatically considered Spanish tax resident. And then also the second one would be having a permanent house available here in Spain, and also obviously the economic interest. So if you have like all your incomes coming from Spain, everything that is generated in Spain, then it can trigger you becoming a Spanish tax resident. And then the last one is the presumption test. It's whether your family is living here, where do your kids go to school. This would be the third one. And as Augusto mentioned, if there are like some discussions between both countries, then you obviously go to the double taxation treaty with the other country, and then you could find out where you should be resident or be paying your taxes.
Mm-hmm. Okay, so just to kind of quickly summarize, there's the days test, which is quantitative, that's objective, everybody gets that.
Yeah.
But there's also a subjective element in terms of, let's say, a center of life test. So, you know, do you have a home available for use, your place of habitual abode, your family, economic interests, and so on. So that's a bit subjective, but those are the two. And then if there's a clash, there's a tiebreaker, assuming there's a double tax treaty in place. Okay. Fantastic. So I think that kind of covers it, generally speaking. So next question. For foreigners, and again, you know, this is a pretty complex question and there are many layers to it, but generally speaking, I'm not talking about the special tax regimes though. Mm-hmm. Generally speaking, what is the personal income tax for foreigners who are resident in the respective countries? Let's start with Spain. Personal income tax, basically.
So whenever you become Spanish tax resident, it doesn't matter whether you are US national, you are Portuguese national. I mean, you automatically, you are Spanish tax resident, means you have to pay taxes on your worldwide incomes, either incomes coming from the US, coming from Spain, coming from anywhere in the world. Those incomes will be taxable in Spain. Well, here, what we have here in Spain, it's a progressive tax rate. Depending on the incomes that you generate, you can go from, let's say, 20% up to the maximum would be 47, and it can be, for example, depending on the region of Spain that you're living, it can go up to 52%. For example, here in Catalonia, it's the region where you pay the most taxes, and it's 52, 54% maximum. So yeah, however, the way they do it, it's a progressive tax rate.
Sorry, and thank you for that. And Augusto, in Portugal, generally speaking?
Generally speaking, so at the moment that a foreigner is considered tax resident in Portugal, he will be treated as a regular taxpayer here. And in general terms, the progressive tax rates up to 48%, depending on the annual level of income, would apply to the different sources of income. Once an individual becomes tax resident, he will be taxed in Portugal on the worldwide income as well, as Ricky mentioned for Spain. And that's briefly the tax regime is similar to any other tax resident. Of course, we may have special tax regimes that may apply, and maybe we will go to that next in terms of a special regime that applies in certain circumstances.
Mm-hmm. Okay, so generally speaking, the taxes, personal income tax rates are aligned with each other, 47 versus 48. However, Ricky, as you pointed out, depending on which region you're in, there may be some local or regional taxes that would apply that will push you up a bit. And then, of course, a separate topic, which we can get into, people are interested in that, there's a wealth tax, which may apply over a certain level. And just to be clear on that, Augusto, there is no wealth tax in Portugal. Is that a fair thing to say?
Yes, it is a fair thing to say. However, there is also an additional surcharge that could reach 5%. That is applicable if the annual income is above 80,000 euros.
5%, so that could push you up to 52, 53%.
Yeah.
Okay, so again, in line with Spain, if you're in Catalonia, for example. Yeah, okay, so pretty even.
But as you said, one of the biggest disadvantages we have is obviously wealth tax. I mean, it's a tax that it's not designated by the government. So each region are the ones that decide if they wanna have the wealth tax or not. Unfortunately, Catalonia, it's one of the worst ones, because normally you have a regular tax allowance for I think it's 700, the first 700,000 of income of the assets that you have are there's like a deduction, but in Catalonia instead of 700,000 it's only 500,000, so it's a disadvantage. But then you have these other regions such as Madrid or Andalusia where there's no wealth tax. So it's a lot of people whenever they want to move to Spain, it's very important for them to look where they are going to live, because it can make a pretty big difference. And then also because of this no wealth tax in Andalusia, which it was introduced in mid 2020, the government decided, okay, since there's not going to be wealth tax here, then we're going to apply a new tax. And this new tax, it's called in Spain, in Spanish, it's called Impuesto de Grandes Fortunas. In English, they call it solidarity tax. So it's for people with wealth over 3 million. Well, they have to pay like a small percentage, but it's another tax that has been added. For now, it's this tax. It's only gonna last 2 years, but who knows? Maybe they'll just keep it. Yeah.
Okay. Very interesting. Okay. Next question for those who are business owners, entrepreneurs. Corporate income tax. Generally speaking, I know that it depends on the type of company, blah blah blah. But generally speaking, what does the corporate income tax look like, Ricky?
Yeah, so in Spain, corporate income tax, it's a flat rate of 25%. But there's one thing that people need to know, that whenever you incorporate a company, the first 2 years that you have earnings, that you have benefits, they're only taxed at the 15%. So at least for the first 2 years, you only pay 15%, and then you go to the 25% tax rate.
Augusto?
The general corporate income tax rate in Portugal is 21%, and a municipal surcharge may apply up to 1.5%. So it depending on the region, but taking into account such maximum municipal surcharge, we can consider a 22.5% corporate income tax rate. There is also an additional surcharge for companies with high profits above 1.5 million, which are subject to additional surcharges, but this is the general corporate income tax rate.
Okay, so generally speaking, slightly more attractive in Portugal. Generally speaking, of course, it depends on the industry, the size of your turnover, et cetera, your location. But okay. Next question, social charges, which are borne, depending on your situation, by both the employee and the employer. If you're self-employed, you bear them all on your own. But sometimes in the calculation, for someone who's planning to move to either Spain or Portugal, sometimes it is something they forget to consider, and that may have a big impact. So with that in mind, Augusto, can you talk a bit about social charges in Portugal, please?
Okay, so social charges apply to employment income and also to self-employment income, if it is the case. In case of employment income, the general rates would be 23.75% for the employer and 11% for the employee, which in total 34.75%. And for self-employers, in general terms, the social security contributions would correspond to a tax rate of 21.4%.
So just to be clear, so if you're self-employed, the social charges would be around 20-something%, but
21.
not right, but not of your entire income. It'll be up to a certain amount of income. Is there like a?
Well, the social security contributions only apply on 70% of the income, case, for example, of services rendered.
Okay, gotcha. Thank you very much for that, Ricky. Spain.
Yeah, and in Spain, for self-employed people, there's like this monthly fee. It's called the autonomous, and it basically depends on the. Well, normally there was whenever you become an autonomous, the first two years you only pay a fee of 50 euros monthly. I think this was changed starting 2023. And I think they moved it up to like 80 euros a month. And then once these 2 years are over, then you kind of like, depending on what you think you're going to earn that year, you just inform the social security, and then they give you like a range where you can say how much you want to pay. And then at the end of the year, they check between the tax authorities and social security They check how much you paid and if you had to pay more or you had to pay less, and then or either you have to pay or they give you like a credit. And for people that has been employed, for the employer, the withholding normally it's around 36%, and the withholding for the employee it's around 5 or 6%.
Okay, so the burden on, just proportionally, the burden on the company, it seems to be a bit higher. Now,
Yeah.
I didn't quite get, for someone who's self-employed, the autonomous, right? So roughly
Yeah.
what sort of percentage would that person be looking at?
So normally what people normally I would say the minimum autonomo that you would be paying if you're earning decent amount of money, let's say over 35,000. Normally the autonomous fee is around 350 euros a month. Yeah, this is the social security charge these people have.
So
there's people for
so just to be clear, it's a fixed amount, not a percentage.
Yeah.
So Portugal is a percentage, and Spain
Yeah,
is a flat amount.
it's a fixed amount that you can increase, because for example some people if they wanna, whenever they want to retire and they wanna like get money from social security, there's people that even pay
More.
over 1,000 euros, for the autonomous
into the system. Right. But roughly speaking, so that flat amount, at least the minimum requirement, does it translate roughly into a percentage or not really? It's
no, it's not really a percentage.
Okay,
It's an amount that, so basically however it works, because I'm not an expert on the labor part, but however it works, you just go on the website from Social Security. You normally put the gross salary that you're gonna be earning, and then it gives you like a range, or either you can pay this minimum or you can pay this much, and then people decide. It's something that it was implemented this year, and then that's how it's gonna work for new people that are gonna be self-employed.
Okay, gotcha. So it's brand new. Gotcha. Understood. Okay. So now that is like the basic part. We've set the foundation. Now we're going to get into the fun part, which a lot of you have asked about, the special tax regimes. So I know each of them is a whole day seminar on its own, right? So they have their own intricacies. So just at a very high simplistic level, how does the special tax regime, which is I believe it's called the Becker law, how does it work in Spain? Very high level.
Okay, so very high level. I mean, it's a special tax regime that it was made for people from outside of Spain that they wanted to come live here in Spain. Basically, there are some requirements that people need to meet. The main requirement is that you need to be employed by a Spanish company. The other requirement would be that you cannot be the director of the company, so you cannot employ yourself. And then the other main requirement is that you can have been tax resident in Spain for the past 10 years. The advantages of being on the Becker law, it's that instead of going through the progressive tax rate, you are taxed based on a flat rate of 24%, which is way more advantageous than being on the progressive tax rate. So it's 24% flat rate for the first 600,000, and then once you go over this 600,000, you automatically go to the 47%. This was made basically for very famous people, such as or either footballers but now they don't really use it anymore because their salaries are so high that these 600,000 are not enough for them. So
right, so well, 24%, that's like half of what the regular rates could be, so that could be pretty attractive. But it is, again, it's very nuanced. So it's a company that the foreigner cannot own, but they must be employed. So I guess they'll need to come to a professional team like yourself to help get it structured?
Yes.
Yeah.
One structure that we are pretty common. Normally we've done this with several clients, kind of like to help them to apply to the Beckham law. We have created this structure where our firm just incorporates the company, and we act as kind of like a fiduciary. We act as directors and shareholders of the company, and then we employ these people. And then with this way, they are able to apply for the Beckham law. And also, I didn't mention the Beckham law. It lasts 6 years. After these 6 years, they can either decide to move somewhere else or they become Spanish tax residents.
Okay, so 6 years, 24%, and you need a professional firm like yourself to help set it up. Of course, there'll be fees that would come
or
with
you
that.
or you have like a
Yeah.
a normal company hire you. Doesn't
Yeah.
matter.
Okay, so that's Spain. Augusto, what's going on in Portugal? Let's talk about the NHR. I know it's very intricate, but generally speaking.
Okay.
Yeah.
The NHR, non-habitual residence regime, is, well, in terms of conditions to apply for the regime, the main one is that the individual has not been tax resident in Portugal for the previous 5 years. So this is the main condition or requirement to apply for the regime. So we are talking about tax residents, so people that decide to move to Portugal and become tax resident. And basically this regime is applicable for 10 years and has certain advantages with respect to specific sources of income. So in general terms, the taxpayer would be treated as a standard taxpayer in Portugal. However, there are some benefits applicable to certain sources, natures or income streams, and also depending on the source of the income. For example, with respect to income from foreign source, there are exemptions available for investment income, such as interest or dividends, or even rents received abroad. There is also tax benefits in terms of the tax rate applicable to employment income or self-employment income derived from what we call high value-added activities. So there is a list of professional activities that can benefit from 20% flat rate for personal income tax purposes instead of the progressive tax rates up to 48%. And there are, for example, benefits for pension income from foreign source, a flat rate of 10%. And these are some examples of income streams that have special rules under this NHR regime.
Okay, gotcha. And sorry, Ricky, you about to say something?
Yeah, one thing I forgot to mention with the Beckham law. Once you are with the Beckham law, in Spain, you are treated as a non-resident. So people a lot of times ask us, okay, I'm on the Beckham law. Do I still need to file the Form 720, which is something that it's very common, a lot of people to ask. No, since you are not considered tax resident in Spain, then you don't have to file. The only thing you have to file is a form that is very similar to the regular income tax, that is just for people with the Beckham law. And also the things that are taxed at a 24% tax rate are the incomes that are generated in Spain. So anything else that is generated outside Spain, it is taxed in the country where it's where these earnings are performed, or they are, if they are not generated in Spain, these things are taxed in these other jurisdictions.
That's an important point, I think, to note that you
Yeah.
are technically, so it's like an exemption from the tax residency that we discussed earlier. So you're not tax resident, and that
No.
that makes a whole difference. So on the surface, just comparing the two. So on the surface, the Beckham law, it lasts for 6 years, 24%. On the surface, NHR in Portugal lasts for 10 years and is 20%. But it doesn't mean that one is better than the other. It applies for very different circumstances. So we've seen clients, so generally speaking, and Augusto, correct me if I'm wrong, if it is especially if we see clients with an interesting investment portfolio where they get a lot of securities income, they get sticker shock because they think they're coming into a more benevolent tax regime, but they will be potentially, especially coming from the US, your effective tax rate will actually be higher than in the US, even under NHR. Is that a fair example of someone who could be a bit shocked by the NHR?
Yeah, because sometimes the NHR regime is confused with the fully exemption regime for
Yes.
foreign income, which is not the case. As you mentioned, for example, capital gains on securities, the general rule would be that such capital gains would not be exempt under the NHR regime. Well, there are some exceptions depending on the country of source, but as a general rule, capital gains on securities would be taxed. Yeah.
So it's exceedingly nuanced. It's not like Spain, it's not like Gibraltar, Cyprus, Greece, Ireland, UK, where you have this clear delineation. If it's local, it's taxed. If it's foreign, it's not going to be taxed. It's not that clear. It's extremely nuanced, and you go through your income sources one by one to see what the impact will be, to see whether it makes sense for you.
Yeah,
Right?
because as Ricky mentioned, this regime is applicable to tax residents in Portugal, so they need to report worldwide income anyway. And it is not a tax regime based, for example, on the remittance of funds to Portugal. It's not the case we have in other jurisdictions.
Exactly. And coming back to Spain, again, it sounds really attractive. Well, 6 years, 24%. That sounds great, right? But one of the things that come up in conversations with people from the US who are thinking about coming over is, well, to set up that structure, there's a cost. So you'd probably want to be earning above a certain amount, or enjoying the benefit of income above a certain amount to pay the fee to set up the structure and to run the structure, right? So generally speaking, ballpark, no commitment, roughly what type of cost and therefore what type of income levels would benefit from the structure?
Yeah, normally for the people that we've set up this kind of structure, it's people that they normally have companies. Well, I'm mostly familiar with the US because we have a lot of US people coming that they are wanting to come to Spain. Normally people that they have companies in the US with really high incomes. But I would say to kind of like take advantage of this, I would say if you earn over 80 to 100,000, I think you could take a really good advantage, because here in Spain, if you're earning incomes above 80 to 100,000, you are on the top rate. You are on the between 47 to 52% tax rate. So I guess once you are on those rates, the applying for the Beckham law could be a really good advantage.
Right. And to your point, so technically you're not tax resident. So you can run those companies from Spain, and the normal triggers around place of effective management do not apply, right?
No, yeah, that's correct.
So you're comfortable. So you can run your American company from anywhere in Spain once you're under the Beckham law, because you're not tax resident, and therefore not get pulled. The company doesn't get pulled into the tax system in Spain. Okay.
Yeah, and what a lot of people ask is, okay, I'm not considered tax resident in Spain. There, where am I considered? Well, then you would have to, obviously, you have to pay somewhere in the world. The most common that we found, the most common clients that we found are Americans, So this is not a huge question for them, because since for American citizens, they are always required to file taxes, even though they are tax residents or not. So obviously they can say that they are tax residents in the US, and then they pay taxes for their worldwide incomes in the US, and then they pay the 24% here for the income generated in Spain.
Fantastic. And for those who just joined us, yes, and you didn't hear the beginning, yes, this is all being recorded and it will be immediately available afterwards. If you want to get, I see questions coming up on the NHR. If you just go to HJ Tax on YouTube and you type in Augusto's name, he's there's hours of conversations with Augusto going into all the ins and outs of the NHR. You can get like 10 hours of just NHR. It's all there. So I believe that every question will be answered. And Ricky, if you go to Ricky's website and you give his credentials later on, he's actually having a live stream. I think it's next week with one of your colleagues. And yeah, and you're going to go into a lot of details. You can go in and out of the Becker law if that's something you are interested in. Ricky, what's your website again for those, just quickly?
Yeah, so our website is www.gpasoc.com. And yeah, next week we're having a webinar, and we're gonna talk a little bit more into detail on the wealth tax and the new regions of Spain that they decided that that wealth tax is not going to be applied. And also we're going to talk about the solidarity tax which was introduced last year. And the most recent thing that was incorporated in 1st of January 2023, the new startup law with the nomad visa. So we're mostly going to cover all these 4 subjects, and obviously with the nomad visa, we are also going to talk about the Becker law. So yeah, it's next Thursday.
Right. And yeah, so again, I'm not ignoring you. I'm seeing the comments on Facebook and stuff. It's just that we want to get through stuff, and this can get, again, this is a rabbit hole. So, and you want to go through that separately. Augusto, if somebody wanted to find you on the web, what's your website?
Okay, so it's www.dfk.pt.
Okay, simple. So you can go down that rabbit hole on each of those topics. Now, so I think that's a decent introduction, but please bear in mind this is an introduction into these very nuanced regimes. But moving on, and as a segue, so that was a good segue into this nomad visa, and of course it's been a popular option in both Spain and Portugal. Could we talk a bit about the nomad visa from a tax perspective? I'll start with you, Ricky, please.
Well, so as I mentioned, it's something that it was incorporated like early January. So it's something that it's very new, and we've had a lot of people asking questions about how to apply to this type of visa and everything, but the government hasn't really give us a lot of information about that, and we are in touch with a lot of immigration attorneys, and apparently now in March they gave some additional information. So if anyone wanted to apply, I mean, we could assist them with that. But tax-wise, the way it's gonna work, it's very similar as being a non-resident in Spain. Basically, it gives you the advantage to being working here in Spain remotely for a foreign company. You can it either works if you are self-employed or an autonomous, or if you are working for a company. If you are self-employed, there's one condition, that only 20% of your incomes can be coming from Spain. And the way tax-wise, these incomes and everything you're generating and all the salary that is being paid to you, it's only taxed at a 24% tax rate. So it's very similar to the way it's taxed. Very similar to the Beckham law, and also, well, obviously, as if you are not tax resident in Spain.
Okay, so that's very
Here
attractive.
sorry.
So I'm
The
just thinking
complicated thing is
it's 15, just to confirm, it's 15.15%, right?
no, it's 24%.
24. Okay, right. Okay, because I've seen elsewhere.
It's the same rate as the
Beckham.
Beckham law. Yeah, it's
Okay.
same tax rate. Yeah.
Sorry, but you were about to say something else. I'm sorry.
Yeah, what I was saying is I mean, it's not the complicated thing, but some of the requirements that they are shown on this new law, they are like kind of complicated because the people that wants to be here and working remotely for the company, they need to know that the foreign company actually needs to be registered in Spain. It's something not a lot of people know about, but actually the foreign company needs to be registered in Spain and then pay the salary through and also pay social security. Yeah.
Okay, wait. So let me just make sure I got this. So nomad visa, you're not residents. You can run a company, but whatever company's paying you must register in Spain.
Yeah.
So this is whether I get that if you're an employee, but what if you're an independent contractor to that company? Does it?
So if you're an independent contractor of the company, then you need to show a business relationship with that company for I think it's around a year that you've been working with this different company, and you need to actually demonstrate that you can work remotely for this company, that it's something that is necessary. And also what I was saying earlier, it's with being an independent contractor, you can actually work for a Spanish company, but only 20% of your incomes can come from Spain. If there are more, then automatically this type of visa will be denied.
Okay. And under either scenario, whether you're an independent contractor to that foreign company or you're an employee to that foreign company, social charges will be triggered regardless.
Yes. For the employer, for the self-employed, no.
No.
Okay. For the person that is actually employed by the company, yes, because the company will, since they will need to register here in Spain, they will pay social security. Yeah.
Gotcha. Thank you for that.
Yeah, what they recommend. What they recommend. Well, and it's also one of the requirements. It's the person moving to Spain. They need to have a private insurance. It's something that it's required.
So they will not, generally speaking, they do not have recourse to like government healthcare facilities.
Yeah, that is correct. Well, the person that is employed, they have access to the
because
public,
they pay social charges, right?
Yeah,
gotcha. Understood. Augusto.
Well, with respect to the nomad visa, so this is not a tax regime and does not have any specific tax treatment. So either the individual is tax resident in Portugal or not, depending on the criteria that we have already discussed. So if the nomad, the individual that obtained this kind of visa meets the requirements to be considered tax resident in Portugal, then you would be subject to the general rules, and for example, it would be available the NHR regime that may apply to him. So, for example, if such person has an activity either as an employer employee or a self-employer, that can be considered high value-added activity, then it can has the benefits of the NHR regime, but does not have any specific tax treatment derived from the type of visa.
Okay, so again, and so they, just to summarize, so for Portugal, it's not like Spain in that within the program there's no special tax treatment, but it can, and it's usually paired with the NHR typically, and depending on your situation, that may be beneficial, because with the NHR, it doesn't apply to everyone that applies. You must fit under one of the government categories of a high value activity as is defined by the government. If you do, then you get your 20%. If not, you're on the regular progressive tax rate. So, but assuming that you do make the cut, it'll be 20% versus Spain, which is 24%. However, with Spain, it's 24% as an independent contractor, no social charges. But with Portugal, it's 20%. Yes, you pay social charges as an independent contractor. Okay, so, but again, none is better than the other. It depends on your unique circumstances. And before you make any decision at all, you'd want to speak with a professional. So, yeah. Okay. Next question. We got lots about foreign pensions. So I know this is highly contentious, hotly debated. People get upset over, in debating this. So let's get some clarity. Augusto, foreign pensions received by someone who's now resident in Portugal, how is it treated?
Well, if we assume that the non-habitual resident regime applies, so as I mentioned before, the 10% flat rate is applicable to pension income from foreign source.
And what if, I'm just throwing this in, what if the person who's receiving that pension was a government employee, military, state? Does that change anything?
Okay, so well, because the rule, of course, of the flat rate, we needs to be evaluated also in line with the rules of the power of taxation of the different jurisdictions, the country of source of the pension and the country of residency, in this case Portugal. And of course, if under the double tax treaty, the pension income can be taxed at source, which is the case, for example, from pension derived from public services. In such case, if there is taxation at source under the double tax treaty, no taxation would apply in Portugal. Because
Gotcha. Yeah. Sorry, you saying?
No, yeah, that's so.
Okay.
But that's an exemption of the pension
treaty
derived from public services, and under the rules of the double tax treaties. Okay. Not under the specifics of the NHR regime itself.
Right. So for just to summarize, if I'm trying to summarize this, for private pensions, i.e. pensions derived from service to the private sector, you'd want to have a conversation with Augusto about the NHR. For pensions derived from government service to the state, you'd want to have a conversation with Augusto about the tax treaty. Is that a fair? Yeah?
Yeah.
All right. Fantastic. Ricky, Spain, pension.
Well, if you're under any special tax regime, such as the Becker law, foreign pensions, since it's not income generated in Spain, they are not taxed in Spain, so
easy.
not our problem.
Yeah.
But yeah, what we found in a lot of cases, it's people that it's actually tax resident in Spain with foreign pensions. Normally, pensions they are they are taxed once you make withdrawals from those pensions. But here we need to take into account if it's a private pension or a public pension. Whenever we talk about public pensions, as you guys were talking about, are people, for example, that were actually working for the government and they are receiving these type of pensions, then these pensions are only taxed in the country of origin. So here in Spain, they would be exempt. But private pensions, as I was saying, whenever people will make these withdrawals, this money will be taxed as earned income on your income tax, and then you would pay tax on those. What kind of like bothers people, or what people are kind of like afraid of, if these foreign pensions, if they will be taxed under wealth tax. Here we need to check at the type of pensions people have. For example, whenever we talk about the US, we're very familiar with IRAs, Roth IRAs, 401ks, and also Roth 401ks. What we have found, obviously we would need to study the type of pension, and then we would make a decision whether it needs to be included in the 720 and in the wealth tax. But normally what we have found, it's Roth IRAs and Roth 401ks. They are normally included, or normally not, they're always included in under wealth tax, and the 720, they also have to be informed in the 720. And traditional IRAs and traditional 401ks, they are normally taxed as traditional pensions here in Spain. So these are the things that need to be in consideration.
Okay, so if I'm to summarize, if it is someone has worked for the government, state, military, under the treaty, tax-free to Spain.
Yes, it's exempt because it's only taxed on the country of origin. Yeah.
Okay, perfect. Now, which is the same case as in Portugal. However, if it is a private pension, then if it's a regular traditional IRA, 401k, it would be taxed as a pension is taxed in Spain, which is it a progressive rate up to 47, 48%?
Yes, it's treated as an earned income, and yes.
Right.
It's same as if you were earning money from salary. Yeah.
It's just income. Okay, gotcha. Yeah. Whereas if it's a Roth, there may be an opportunity for some planning in terms of the return on the investment, because it's after tax, investment. Is there an opportunity for planning? Yeah.
The issue with Roth IRAs and Roth 401ks, it's that they are both taxed in wealth tax and then also in income tax. Okay. And that's what people are mostly concerned. I mean, they're not that much concerned about income tax. They are mostly concerned about wealth tax because it's something that you need to pay every year.
So. Right. But of course, as you mentioned, if you were under the special tax regime of the Becker law or the nomad, you're good. Okay.
Yeah, you're good because since you're not considered tax resident, then you don't have to pay taxes here in Spain for that.
Fantastic. Very good to know. Moving on, and yes, I see a lot of questions coming in, but hopefully what we're dealing with, we took all the questions that came in and we looked for the similarities and we came up with these 10. So yes, I'm seeing your question, but we've kind of synthesized it into these 10. So moving on to number 8. We're going to talk about this. Under some regimes, depending on when you enter the country and become tax resident, it may be possible to split the year between the time that before you arrived, let's say in Spain or Portugal, and since you arrived in Spain or Portugal during the calendar year. So I'll start with you, Ricky. In Spain, is it possible to get that sort of split year treatment, or in the US we call it a dual status treatment? Or it doesn't exist once you trigger tax residency, you're all in for the entire calendar year?
Yes. So basically, how it works, it's with this point we basically move to the first one. We would go to the three criterias, and we would check whether you are considered Spanish tax resident or not. Normally, whenever people want to move to Spain, we actually recommend them, in order to avoid being tax resident that year that they are moving. We normally recommend coming the second part of the year. So let's say from July forward. This way, these people can avoid becoming tax resident that year. Yeah, that's just something that we recommend, and it also gives us advantage to do like some tax planning. It gives us one more year to plan everything better, and to give like the best advice to the potential client.
But having said that, so that deals with the first criteria, but the second too. So like if you come in August or September, but then your center of life becomes Spain, wouldn't that
Yes.
still trigger, is that a sort of gray area?
Yes, it would become a gray area.
Mhm.
But what we will do, kind of like to avoid being tax resident in Spain for that year, if we are able to justify that this person has actually paid an income tax somewhere else, we are able to provide this the tax filing, also the tax payment. And then if we are, what the Spanish tax authorities normally want to see, tax residency certificate issued by the country of residency. If we are able to provide all those things, then the tax authorities won't be able to say anything.
Okay, so and again, just playing with that theme, just one more question, and this is the point that Jay Mendez has raised in the chat below. What if you come in like a regular person, like tourist or whatever, and then you jump on either the Nomad or the Beckham law? So for part of the year, you were full blown exposed,
Yeah.
but then for part you were not, right? Isn't that like a split year as well?
Yeah. So what happens is for either to apply for the Beckham law or either to apply for the Nomad visa. Well, we need to differentiate. The Nomad visa, it's actually like the residency status, and then the Beckham law, it's a special tax regime. So was Augusto was saying, I mean, the Nomad visa is not actually taxed; it's more of a visa, and then it has like some tax advantages. But you can enter in Spain as a tourist, and then from here you can make all the necessary paperwork to actually become, actually apply to the Beckham law if needed, or you can, and it's the same for the Nomad visa. You can enter here as a tourist and then look for an immigration attorney to do all your paperwork to apply for the Nomad visa. Or you can do everything or plan everything before coming to Spain. But the thing that happens is for the Beckham law, you actually need to be employed. Whenever you do the application, you need to have like your employment agreement with the Spanish company. So normally people, they are already living here in Spain. For those months that the Beckham law hasn't been approved yet, these people, they are taxed as non-residents, so no problem for them, because once they get the Beckham law, they will be taxed at the same rate, 24%. Yeah, that's the way it works. So you can come here as a tourist and then do all the procedures, that you need to do.
Fantastic. Thank you for that, Ricky. Augusto, what's going on in Portugal? Is there possibility to do that split year?
Yes. In Portugal, we have the concept of partial tax residency, meaning that individuals can become tax resident the day that they arrive in Portugal until the end of the calendar year. For example, picking at the July or August, if the individual moves to Portugal he can be considered tax resident since July or August until the end of the year, meaning that he will only be taxed on the income earned after that specific date.
Okay, so that's a great planning opportunity. So if you want to move to Portugal, you're looking at late summer is probably the best time to, at least for tax purposes, and maybe others, but yeah, okay.
And always important to match the date of registration for tax purposes in Portugal with the date when the individual is leaving the previous country of residency.
Mm-hmm. Okay, all right.
To avoid the discussions around the double taxation.
Mm-hmm. Yeah, which is, nobody wants to hear that. Nobody wants to hear about double tax. So you need to get that right.
Yeah, and Darren, one thing to mention that I read on the chat. No, whenever you want to apply to the nomad visa, you can have been tax resident in Spain for the previous 5 years. It's something they changed with the Becker law. With the Becker law, it's 10 years. With the nomad visa, it's 5 years. But if you are already tax resident in Spain, then sorry, but you cannot apply to this type of visa.
Okay, so it's something that you need to decide on as soon as possible, either before coming or just after arriving. You need to have the conversation with yourself. Okay, all right, that's good. That's good to know. Okay, so we have 2 more questions. Question number 9. Fallback rules. So there are certain rules around, like when you leave Spain or Portugal, potentially you may still be caught in the tax nets of Spain and Portugal, even though you're not technically there. Is that possible, Ricky? Is that possible? How does that work?
So basically, exit tax. I mean, there's exit tax in Spain, as we mentioned earlier in a conversation, Darren. The criteria for that exit tax, it's pretty high because you need to have shares of over 4 million. Well, you will be lucky if you have like this kind of money. And this is only the exit tax we have here. And well, the most common is whenever people move to a tax haven. There's this rule here in Spain, it's called the quarantine rule, that whenever someone decides to move from Spain to a tax haven, they are actually considered tax residents for the next 5 years.
And to get that list of tax havens, is that you get that on one of the government tax websites, right?
Yes. Yeah. If you go to the government, you can check the tax haven countries. Basically, the tax haven countries are countries which Spain doesn't have a double taxation treaty.
Yeah.
I mean, we have over 100 double taxation treaties. So, but yeah, there are some countries that they are considered as tax haven.
So basically, so we have it on our website for those who just want to access it quickly. Just go to htg.tax. So basically, it's all the fun countries. Any island with 0, or the UAE, which is also 0, that people want to go to. It's probably on that list. So yeah, okay. Augusto, does Portugal have anything like that? Any sort of exit or quarantine rules?
Okay, it is in terms of the fallback rules or quarantine rules. It's similar to Spain. So, in case an individual moves to what we call blacklisted jurisdiction, and blacklist in Portugal is well a long list.
Pretty long. Yeah.
The individual still be deemed as tax resident in Portugal. Unless he is able to prove that he moved for justifiable reasons, namely to work, to have an employment contract in such jurisdiction. But the rule is similar to Spain. We do not actually have exit taxes. There are some specific situations that can be picked by specific rules of exit taxes. For example, we have a pretty recent one that was introduced for 2023 with the state budget for this year that is related, for example, with cryptocurrency. Because when you leave the country, can trigger taxation on crypto assets. But just an example that we may have some specific rules with respect to taxation on exit, but there is no such a general rule.
Okay, gotcha. Okay, so the last question, and thank you for being so generous with your time, gentlemen. The last question. Tax for non-resident landlords. So landlords that are not tax residents in Spain or Portugal, but they're in love with the country, they have their holiday home, something on the beach, and they may rent it out when they're not around. Obviously, that's Spain or Portugal source income and be subject to some sort of tax. Augusto, how would it be taxed by Portugal non-resident landlords?
Okay, so in case of rental income or even capital gains derived from the sale of property in Portugal, such income would be taxed in Portugal, even if it is earned by a non-resident, and the tax rate would be 28% for rental income. And with respect to capital gains, there was also a recent change in the law, and the taxation would be at the progressive tax rates in force in Portugal as it is applicable to tax residents, but the taxation, it's only applicable on 50% of the capital gain.
So basically, roughly, well, the progressive rates, they jump to 47-48% pretty quickly, right? So it may be half of what the profit is on half of the sale price. Okay, gotcha.
So to simplify, 24%, for example, just
to keep it simple. But okay, so I just want to go back just real quick to the rental income. Is there any distinction between short-term rental like Airbnb as opposed to long-term rental income, or is it the same?
There could be differences because short-term rental could be a business activity, and in such cases it may trigger other tax obligations, because the individual that is non-resident is considered to have a business activity in Portugal, and it has different obligations.
Okay, understood. Thank you for that.
And the income may be treated as a business income and not as a rental passive income.
So even if, okay, so then it will be, well, it's business thing will be taxed at corporate rates like 21.75%, is going to be taxed.
In case of non-residents, it would be a rate of 25%.
25%. Okay, right. Gotcha. Understood. 25. Okay, it's not too bad, Okay. Ricky, what's the situation in Spain? Non-resident landlords.
Yes. So in Spain, it's it's treated as non-residents. Basically, any income that's generated from those properties, either if it's rental income or capital gains, depending on whether this individual is from the EU, they would be paying 19% on that, or if it's from outside the EU, it's 24%. I mean, it's as simple as that. Regarding what you mentioned, if it's like a short term, it's very similar to what Augusto mentioned. Maybe it can be considered business income, and then that income could be taxed at 25% as if it was a company.
Okay, right. So roughly in line with Portugal, Spain and Portugal in line.
Yeah.
What about a sale? What if you were to sell the property?
So if you were to sell a property, then it is in this case, it is taxed on whether the sale has been made, and then we would check if this person has a gain or not, and then they would pay on those gains. And as I said, if the person is from the EU, it would be 19%, and if not, it's 24%.
Okay, 1924. So whether it's a sale or rental income, same.
Yeah.
Okay, gotcha. All right, that's good to know. Gentlemen, that's it. We've come to the end. Appreciate everyone who's joined us and who's asked questions. We got something like 63, 64 questions, but we have kind of compressed those down into the 10 that we've asked because many people are asking the same thing in different ways. So those 10 questions kind of, at least we believe, capture the spirit of what everyone is trying to ask. If it is that you still need to take a deeper dive into your situation, because again, we've just spoken generally. Just to repeat, Ricky, do you want to say again? And remember, some people would be listening and they can't see you, right? So could you just repeat again how they can find you, please?
Yeah. Well, my email it's ricky@gpasoc.com. And our website is www.gpasoc.com.
Right, and Ricky's going to be doing a live stream with his colleagues next week. So if you want to take a deeper dive, you can join him for that. Yeah,
next week, next Thursday. I think it's at 5 p.m. We are doing a webinar on wealth tax and also the new startup law and the nomad visa.
Okay. And Augusto, if someone wants to engage you and your team, what's the best way to reach you?
Okay, the website of our firm is already in chat, I believe, and my email address is augusto.paulino@dfk.com.pt.
Okay, wonderful. Yes, that is it. And for those who've just joined and you're asking, yes, this is all being recorded. It'll be immediately available. So just keep checking the various platforms. Thank you. Have a good evening, morning, depending on where you are, and we will see you next time. Bye-bye.
Yeah, thank you so much, Darren and Augusto, for this webinar.